Good evening and welcome, everybody. Back to work and back to setting records. Investors return from the long holiday weekend in a buying mood, pushing the S&P 500 into record-closing territory and driving the enthusiasm today with deals and data. Pilgrim's Pride offering to buy Hilscher brands for more than $6 billion. More on that one in a moment. And on the economic front, orders for durable goods rose unexpectedly. Confidence climbed, and according to the Case-Shiller Index, home prices are still increasing, though not by as much as they had been. By the close, the Dow gained 69 points to finish at 16,675. The Nasdaq added 51, the S&P 500 up 11 to close at that all-time high. And there were other milestones in today's market. The transportation and materials sectors sitting now at all-time highs, while technology stocks are at levels not seen since the year 2000. But this year, believe it or not, the biggest winners as a group are utilities. Yes, utilities. They are the top sector of 2014 so far, up more than 10%. Dominic Chu takes a look at why there's so much interest in this staid and stable industry and why boring may be beautiful for you.
They may not be all that glamorous, but utility stocks have been Wall Street darlings so far this year. And there's a big reason why. Dividends.
The utilities tend to have a higher yield than, say, some of the S&P 500 companies. Utilities tend to grow their dividends pretty consistently every year.
Utility companies tend to pay out more of their profits to shareholders rather than reinvest all those profits back into their business. So, if you're an investor looking for an income stream from your investments, utility stocks can play an important role. Jill Cuniff is president of Edge Asset Management, and her firm manages over $26 billion in client assets. They've got a specific focus on income generation, and they invest in, among other things, utility stocks. Among her favorite picks in the sector are companies like Sempra Energy, which owns utilities in Southern California as well as Latin America. She also likes Wisconsin Energy in the Midwest. Both companies have a dividend yield of around 3% and have grown their dividends substantially over the course of the last 5 years. Another big reason that investors like utility stocks is their relative immunity to the ups and downs of the overall economy. No matter what, customers will always spend money on electricity and natural gas. They literally power the American economy, no matter how strong it is. But, as with all investments, there are risks. Utilities are no exception, especially if bond prices start to fall and interest rates begin to rise.
When yields do rise back, the first thing investors will do is sell utilities. Utilities are being bought for non-fundamental reasons, which is basically their dividends. But if you look at the S&P in the total growth, most of the utilities have very low to no growth.
So, the bullish case for utilities involves generating investment income from dividends. The bearish case for utilities involves an improving economy and rising interest rates, which could put a damper on low-growth safety stocks. No matter what your view, utility stocks are definitely worth paying attention to. For Nightly Business Report, I'm Dominic Chu.